Hello and welcome to our channel. I am Adam from Money Talks, Finance Pro Tips team. Today, we're diving into a critical and potentially controversial topic, Amazon stock, and whether its price could drop by a staggering 90%. Yes, you heard that right. This is a bold question, but in today's video, we'll analyze the scenario from every angle. We'll look at Amazon's fundamentals, market trends, economic factors, and the bear cases presented by skeptics. Whether you're a current Amazon investor or just interested in the markets, this video will provide you with valuable insights. Let's get started. The current state of Amazon Amzn stock. Amazon Nasdaq Amzn has been one of the most iconic and transformative companies of the 21st century. From its humble beginnings as an online bookstore, it has evolved into a global powerhouse, dominating industries such as e-commerce, cloud computing, digital streaming, and artificial intelligence. As of today, Amazon's market capitalization stands at an impressive $2.3 trillion market cap, making it one of the largest companies in the world. Despite its success, Amazon stock has faced significant volatility over the years. Most recently, macroeconomic pressures, fears of a recession, and rising interest rates have led to a sell-off in many tech stocks, including Amazon. With these factors in mind, some analysts and critics have raised the possibility of a massive correction in Amazon's stock price. But is a 90% drop realistic? Let's break this down. Amazon's business fundamentals. To determine whether Amazon stock could truly lose 90% of its value, we first need to analyze its business fundamentals. Here are the key segments that drive Amazon's revenue. 1. E-commerce. Amazon's e-commerce platform accounts for a significant portion of its revenue. While growth in this segment has slowed post-pandemic, Amazon remains the dominant player in the online retail space, particularly in the US and Europe. 2. Amazon Web Services, AWS. AWS is Amazon's crown jewel, contributing a significant share of its profits. In 2022, AWS generated $80 billion in revenue with robust margins. Cloud computing continues to grow as businesses move their operations online. 3. Subscription services. Prime memberships and services like Amazon Music and Prime Video create a steady stream of recurring revenue. 4. Advertising. Amazon's growing advertising business is another high-margin segment, competing with giants like Google and Facebook. When you combine these diversified revenue streams, Amazon's business appears resilient and well-positioned for future growth. However, let's now examine some of the bearish arguments. Bearish case. Could Amazon stock drop 90%? While a 90% drop in Amazon stock price might sound extreme, it's not entirely without precedent. Even the most successful companies have faced significant corrections in their stock prices. Here are some of the arguments skeptics make. 1. Valuation concerns. Critics argue that Amazon's current valuation is still stretched. The stock trades at a high price-to-earnings (PE) ratio compared to historical norms. If market sentiment turns sharply against tech stocks, Amazon's valuation could compress significantly. 2. Rising competition. In the e-commerce space, Amazon faces increasing competition from companies like Walmart, Shopify, and Alibaba. Similarly, in cloud computing, AWS is under pressure from Microsoft Azure and Google Cloud. 3. Economic pressures. Rising inflation, higher interest rates, and slowing consumer spending could negatively impact Amazon's revenue growth, particularly in its e-commerce division. Prolonged economic downturns could amplify these challenges. 4. Regulatory risks. Governments around the world are scrutinizing big tech companies for antitrust issues and privacy concerns. Any significant regulatory action against Amazon could lead to fines or structural changes that harm its profitability. 5. Historical precedents. During the dot-com bubble of the early 2000s, Amazon's stock price fell by more than 90% from its peak. While the company eventually recovered and soared to new heights, such a crash shows that even Amazon isn't immune to extreme market corrections. 6. Potential over-reliance on AWS. While AWS remains Amazon's profit engine, it's not immune to competition. A slowdown in AWS growth due to cost-cutting measures by businesses or aggressive pricing by competitors like Microsoft or Google could significantly impact Amazon's bottom line. Bullish case. Why a 90% drop is unlikely. Now, let's take a look at the other side of the argument. Here are the reasons why many analysts believe that a 90% drop in Amazon stock is highly unlikely. 1. Dominance in key markets. Amazon's scale and dominance in multiple industries provide a strong competitive moat. It's not just an e-commerce company. It's also a leader in cloud computing, digital streaming, and AI. 2. Consistent revenue growth. Despite economic headwinds, Amazon has consistently grown its revenue over the years. Its ability to innovate and adapt to changing consumer demands is a testament to its strong management. 3. Cash flow generation. Amazon's strong cash flow generation from AWS and its subscription services provides a financial cushion to weather economic downturns. 4. Investor confidence. Amazon remains a favorite among institutional investors due to its long-term growth potential. Even during periods of volatility, many large funds continue to hold Amazon stock. 5. Post-dot-com recovery. While Amazon stock price did fall by over 90% during the dot-com bubble, it's important to remember that the company was still in its early stages at the time. Today, Amazon is a mature, diversified, and highly profitable company with a proven track record. 6. Technological innovations. Amazon's ongoing investments in areas like artificial intelligence, logistics automation, and renewable energy position it for long-term growth. These innovations are likely to enhance operational efficiency and open new revenue streams. Key risks to watch. Even if a 90% drop seems unlikely, it's important to keep an eye on potential risks that could impact Amazon stock performance. Macroeconomic factors. Prolonged inflation, interest rate hikes, or a global recession could impact consumer spending and corporate budgets. Technological disruption. Innovations from competitors or new market entrants could threaten Amazon's leadership in certain industries. Geopolitical tensions. Trade wars, sanctions, or other geopolitical issues could disrupt Amazon's global operations. Data privacy issues. Any significant breach or misuse of customer data could lead to regulatory fines and loss of consumer trust. Dependence on global supply chains. Disruptions in supply chains due to natural disasters, pandemics, or political conflicts could impact Amazon's operations. Conclusion. Is a 90% drop realistic? So, will Amazon stock price drop by 90%? While history shows that extreme corrections are possible, the likelihood of such a dramatic decline in Amazon stock today appears low. The company's strong fundamentals, diversified revenue streams, and dominant market position make it well equipped to navigate challenges. That said, investors should remain vigilant and avoid complacency. Market conditions can change rapidly, and it's always wise to diversify your portfolio and manage risk appropriately. What do you think about Amazon's future? Could we see a massive correction, or will Amazon continue to thrive? Let us know your thoughts in the comments below. If you found this analysis helpful, don't forget to like, share, and subscribe to our channel for more in-depth stock market insights. Thanks for watching, and we'll see you in the next video.